Does the MACD indicator work? Can we use the MACD indicator to place trades? One way to find out and determine if this is something that is useful, investable, or not is to run backtests on it. Well, I'm going to run 3 different types of backtests using the MACD indicator. One of the backtests is going to be an always in backtest where no matter what happens, we're always in a trade, either in a long trade or a short trade. And the always in trade is essentially almost like a circular trade where you're long, and then if a short setup comes, this short will essentially be enacted, closing the long position. And the vice versa of that is true. If you're in a short position, then only the long setup and the long entry would close the short position. And then I'm going to do that same test on higher time frames because many MACD users, they'll say, well, don't use MACD on the current time frame. So if we're trading the 1 minute chart, they'll say use a higher time frame. Well, I'm going to use 3 different time frames. I'm going to use the 4-hour chart, hourly, and a 30-minute chart. It's going to do its trade on the 1 minute chart, but it's going to reference the MACD on those higher time frames. And then the third test that I'm going to run with MACD is that I'm going to run a time-based test, meaning a lot of traders will say, well, if it's a always in trade, that means that I'm trading overnight and I'm not comfortable trading overnight. I'm interested in finding out if the MACD would work during regular trading hours. Well, I'm in Los Angeles, so I'm in Pacific Standard Time. So 6:30 to 12:45 would be 15 minutes shy of a full regular trading hour session. Of course, when it comes to futures, the session actually starts the day before at 3 p.m. my time, 5 p.m. Central, 6 p.m. Eastern, and it goes all the way through 2 p.m. But for the purposes of this demonstration, I'm going to run the third test, this third back test, from 6:30 a.m. until 12:45 p.m. So it's going to look for both long and short trades during that time. Now, I should preface all of this by saying this, of course, this is hypothetical. I do not recommend that anybody should be trading off of a single indicator or even just a confluence of indicators. And I've said in other videos that if you're trading with any type of current price action, I don't care if you have 20 indicators, if you're trading with only exclusively with current price action, thus you're ignoring historical price action, then you are definitely setting yourself up for something of a less than stellar type of result. And the reason being is, think of trading as a puzzle. Think of all the pieces that you have. Imagine you've put all the pieces of the puzzle together and you had one piece missing. How would that make you feel? Now, same scenario, when you don't have historical price action and you have a puzzle that you're trying to form, well, you're missing about half of the pieces of the puzzle. Okay, so you're missing a big chunk. It's not going to look at all as the intended outcome of that puzzle. So it's essentially, in my opinion, not investable if you're not trading both with historical price action as well as current price action. Now, for the purposes of this demonstration, what I've done is I've taken my actual strategy, which is Price Action Harvester Automated, which is available on pinnaclequant.com, and I've stripped out all the parts that make it really nice, and I've left only the parts, really only the MACD indicator, so that I can run that during the particular time frames that I'm wanting to run it. So all the parts that I'm going to be showing you are essentially inactive, but I'm going to make this active. Okay, so when I say this, I'm pointing to the screen, and essentially I've got the long and the short trade strategy here. So, but before I jump into that, let me explain from a coding perspective, or from a calculation perspective, how the MACD works. I'm actually not going to explain in great detail anyway how the code works, because this video will be like several hours long. But what I'm going to do is, in this time allotted for this video, I'm going to demonstrate what I've done with the code and then what the code really means. So you're going to really understand it in a very simple way. How does NinjaTrader basically, what's their naming convention? So the MACD line, this is how they calculate it. It's the 12-day moving average, exponential moving average, subtracted from the 26-day exponential moving average. That's how you get the MACD line. The signal line, or what NinjaTrader calls the average, and I described that here in line 726, is the signal line is your 9-day EMA of the MACD line. Make sense? So the 9-day EMA of the MACD line. And then your MACD histogram is a simple calculation. That's you take your MACD line minus your signal line. That's your what NinjaTrader calls a diff. Okay, D-I-F-F. So NT8 naming convention of plots. MACD equals the MACD line. AVG equals the signal line. Diff equals the difference between the MACD line and the signal line, which is your histogram. Let me show that to you on a chart so that this makes more sense. This is a data box. If you guys haven't used NinjaTrader 8 before, you can download a free copy of NinjaTrader. A link to the NinjaTrader website is available on my site, pinnaclequant.com. And it's free to download. It's free to run simulated backtests on it. Of course, you need data. You can connect it to your broker's data, or you can pay for data. NinjaTrader themselves, they're a broker as well, so that's an option. However you get the data, you have to get the data, but then you can run the backtests for free. The only time you have to pay for a NinjaTrader license is if you're trading live cash. Okay, that's when they ask for their license fee. So here I have the data box loaded. So the MACD indicator, let me close it actually, or move it over. The MACD indicator right here has been loaded. This is the GC, the gold chart, gold futures. So the dark cyan color is your MACD line. I hope you guys can see that. That's obviously the dark cyan color. That's the MACD line. The average line, which is the signal line, is the crimson color. Okay, and then your diff is your histogram. Think of a histogram really as momentum. Okay, so think that the bigger the bigger that bar in the histogram, the more momentum there is. And then of course there is the view that some traders have if they had a huge amount of momentum coming in relation to the other momentum bars that are being formed on the histogram, then that could be faded, meaning that if it was like a powerful breakout type of a move, if it hits some sort of a resistance level, there's a probability there that it's going to fade, it's going to reverse out. Excuse me. So let's go ahead and switch back to the strategy so I can show you what's going on. We don't need the data box anymore. What I've done in the code. Okay, so I'm just going to basically cover the code in a very quick way. So if essentially I've broken down the code into two sections for long and short respectively. So for the long trades, if always in trade is true, that means this bool is selected. So the checkbox for always in is selected in the properties box that I'm going to show you on the strategy analyzer while we're going to do the back test in NinjaTrader. If it's selected, then it's only going to run these two lines and this. Okay, so these two lines essentially mean what? They mean what typically what most traders look for when they're looking for the MACD is they look for the MACD line to cross over the average. Okay, so the signal line. If that happens, and that's that line right here, and the line 739 is if the diff has essentially increased. Okay, so the momentum has increased. Okay, and this line describes that. In case anybody's wondering, math apps is just the absolute value of this calculation. Okay, so we're basically saying that the nearest bar is essentially bigger in momentum than the previous one. So I should probably adjust this to 1 so that it's fair, so that we're doing a 1-to-1. So basically, if that's disabled, if this is disabled, then this part of the code is going to run. Okay, so if this was not disabled, this was essentially disabled, the always in was disabled, it equals false, then this is going to run. So basically this is looking for something very similar, except it's looking for the position to be flat before it makes an entry. So it's not going to close. If you're in a long position and a short signal has been reached, then it's not going to close that initial position. Okay, it's going to wait until it's exited. How does it exit? Via either a profit target or a stop in this demonstration. And so in the case of the second portion, it's the same. The rest of the logic is the same as the top, but this part is different, meaning it's looking for a particular from time and a particular start time and a particular end time. So it's going to start, let's say it's 6:30 and at 12:45. All right, that's for the long position. For the short position, it's the opposite. Okay, you just have to flip out that logic. So basically, it's the average is crossing below. So the signal line is crossing below the MACD line. Cross below. Okay, line 762. Cross below, and the diff is actually increasing again. So we're still looking for momentum, okay? And if that's always in is enabled, if always in is disabled, then it's this part of the logic is going to run, which is the same thing as these two, except it's looking for the trade to be in a flat position before it enters a new trade, and it's looking for a particular from and to time. Okay, trade start time, trade stop time. Okay, so that's in essence the strategy. That's it. Now let me show you what the backtest parameters look like. So I mentioned at the onset that I've essentially taken my price action harvester automated strategy, and I've stripped out all the parts. Okay, and I've added enable always in. So what are the parts that I've stripped out? Not all the parts, but a majority of the parts have been stripped out, like the money management per unit. I'm not going to use that. Okay, so that basically looks for trades. It stops looking for trades when it hits a profit limit, stops looking for trades during that session if it hits a loss limit. It stops looking for new trades if it has a consecutive losses, like if you have 2 consecutive losses, stops trading. I'm not going to use that. I'm not going to use move stop. Move stop is not a trailing stop. A lot of people think when I show them that's what that is, trailing stop. It isn't. Move stop is fairly unique. If everybody wants a demo on how that works, I can show that to you. Simply fill out the form on pinnaclequant.com, request the live Zoom demo, and I'll show that to you. We are going to use the price target and the risk per trade. Risk per trade is a stop, but we're not going to use the risk integrity long and short check, which essentially checks to see if the amount that you've put in for your stop is enough to handle the kind of market that you're in. And if it's not, it doesn't take the trade. We're going to use quantities. We're not going to use anything with special operations, which is a cool feature that I added in version 4. Again, if somebody wants to know how that works, please fill out that form on pinnaclequant.com and request the live Zoom demo. And we are not, for the always in trade, going to use flatten everything, but we will use that for the time-based trade, because again, some traders want to look at the MACD and go, well, I want it to see if it works during the hours that I'm going to be looking for trades, which is during regular trading hours. So meaning that they're going to exit when the market's about to close, so we can set an exit there at 12:59 my time or 3:59 p.m. then Eastern time. Okay, so let's go and run it. Let's check to see what's going on. So enable always in, yes, we want that. We're not looking for any type of a trade, so the go long and short, that's based on time, so the go long and short is disabled. For money management, let's make it so that it's just not even taking anything into consideration here. Basically, this means since it's not going to get to 50,000 in a session for a single contract, so it's going to ignore the money management features. Let's disable move stop. Let's make this a number that's not going to be hit. Okay, so it's not going to hit 99,999 in this session. It's not going to hit 9,999 ticks either. We want 1 tick. We're ignoring everything with special operations. We don't want to flatten everything because we want an always in. That's circular trade that I was mentioning. So let me go and run this now. Oh, let me show you the how long. No, we don't want 2022. Let's give us 3 years. Okay, let's take 3 years of a back test so that it is fair. I don't believe in those 30 days or 90-day trades that I've seen people do. That just doesn't make sense to me. It's not enough of a data set. And then let's add some slippage. Let's give it a 1 tick slippage on both sides. It's going to do 1 tick slippage. I'm not going to do commissions, but just add, let's say, for the calculations purposes, whatever number of trades that this backtest is going to produce, multiply that by, let's say, 4. Okay, it could be 7. I don't know what broker you're using, but whatever number you come up with your broker, multiply that for the round trip number. Okay, for the number of trades, just number of trades multiplied by the round trip payment that you're going to make to your broker. So let me go and run this. Everything's cool. Yes. Oh, we haven't selected the instrument. Let's say GC. And this is going to take a minute or so for it to run. Okay, guys. So as I'm waiting for it to load, remember, we're trying to decide in this video if the MACD is something that a strategy can be based on as an indicator. And it is one of the more popular indicators that are out there. I would say it's probably top 5, especially in the retail world. Okay, on the commercial side, not very many people use it that I know of. All right, those results are not they are not very good. So I'm glad this happened because I wanted to show this. So percent profitable was 46.17%. Now, typically, if this was a decent strategy, I would say 46% is not bad, because remember, it all depends on what your risk reward ratio is, right? So if it was 1 to 3, 1 to 4, then it would make a lot of sense, right? You 46% at 1 to 4 risk reward ratio, I mean, your results would be very good, depending on the average trade size, etc. But you get my point. Well, this is terrible. Okay, so this is at this level, you'd say like this is not investable, right? So we've run so far a simple test on I mean, look at the number of trades, guys. It's 9,133 trades. Let's break down the analysis a little bit. That hurts. Let's the analysis. So this is the yearly. Oh, that is so bad. Let's move that back over. All right, I want to do that. So 19, 20, 21, 22. Net profit is abysmal. So you would have lost a lot of money. I think I made my point there. Let's go in and test it the other ways that I said we're going to test it. Excuse me. Let's go and test it the other way I was going to test it. Okay, so let's go ahead and test this via a time frame. Okay, actually no, before we do that, let's test the higher time frame. Okay, let's do that one first. So let's go to line 480 where I put the code for that. Okay, so all right, what I'm going to do here is, don't be confused by this, but I'm going to change this close to a time frame that I have assigned in my index in my code. Again, I don't want to get too deep into this, but basically this time frame here, bars array 1, means that it's checking my first index, which is the 240-minute chart. So it's going to check the 4-hour chart. So the MACD is going to be plotted on a 4-hour chart, but we're going to be trading on the 1-minute chart. So what we're trying to do is we're trying to trade the 1-minute chart, but we're referencing the trend because we're looking at a higher time frame. This is what a lot of MACD traders say. So I want to focus on the higher time frame. Well, let's do that. Okay. So let me go ahead and compile that, and let's see what the results are going to be. So this is a higher time frame. Okay. So on the 1-minute chart, it was very, very bad. So let's go ahead and run it the same exact test, except now it's going to be referencing a 240-minute or a 4-hour chart. Okay. Let's see what happens now. I hope this is going to be useful to you guys, that you'll get to understand. Now, again, my view, personal view, is you don't have, and I mentioned it before, you don't have historical price action. You've got half the battle figured out. Okay, and I'm being positive there. Half the battle. You're missing a lot. You're missing a lot. And many retail traders, you know, when you read those statistics, 97% of traders lose money over a 2-year period. That was the Brazilian study. I mean, there's a reason for that. Okay, so on the higher time frame, it is much worse. Unfortunately, it's much worse. Okay, so those that have that idea, and I'm being very sorry. You would add more elements to this strategy, right? If you were trading the MACD on a higher time frame, certainly you would do that. You would put a bunch of other rules in there, but still, we're trying to isolate the MACD indicator here in this experiment. Okay, we're trying to isolate it. We can always add other elements. What if we also had the EMA and at 21, and then the EMA at 50, and it had to be over the 200-day EMA. Plus, we had RSI had to be below a certain number, stochastics had to be below a certain number, etc., etc. Okay, you could add it, and it would improve the results, but it would not get it to where it needs to be, in my opinion. Okay, just based on my experience. So that was a 240-minute. Chart. 2 is a 60-minute chart. Okay, that's how I've programmed it in this strategy, so that the higher time frame. Now we're going to stop looking at the 240-minute chart. We're going to look at the hourly chart. Okay, so that noise you heard was NinjaTrader compiling the code. So let's see what this does. And I do plan on making more of these videos with a bunch of other indicators. I'm thinking 30 or 40 indicators. So if you guys want to see a particular indicator that's freely available, guys, that you want me to run a test on that, If it's freely available and it's made for NinjaTrader 8, then let me know about it in the comments field. When I get around to it, I'll make a video about that too, so you can get an idea of, if we isolate that indicator, what it's going to do. Okay, we're not going to add any other elements to it. Still very, very, very bad. Okay, this of course does not surprise me, but I'm just demonstrating this as so that we can have conclusive evidence here. If we isolate the MACD, what it's doing in a backtest. What I'm running here is a 30-minute time frame, so we're going to not check now check the 30-minute time frame. So we're essentially plotting MACD on the 30-minute time frame, and the rules that we're looking for are being applied on the 30-minute chart now. So let's see what that does. Again, I'm expecting it to be very bad. We'll see exactly how bad. I wish there was some noise, some music being played right now. All right. It's better than it was for, especially in 2019, what it was for the hourly. But I mean, this is like horrific, right? This is terrible. So let's stop trading it that way. Let's run the final test. So instead of saying always in, which I'm sure some people who are watching this are going to say, well, that's the reason why it's so horrible, because you're always in. You're trading at off hours. Nobody trades at off hours. There are some people who trade for off hours, but let's assume that that mindset or that viewpoint is correct, that most people don't trade during off hours, and that is true. Most people don't. So what we're going to do now is, since I disabled enable always in, I disabled that, I unchecked it. So now what I'm going to do is I'm going to say, okay, let's look for trades between 6:30 and 12:45, and let's look for both long and short trades. Okay, so we're looking for long and short, and then we're still going to ignore money management. Okay, we're going to ignore move stop. We are going to take this into consideration. So I'll run a couple of tests. I'll run a 1-to-2 risk reward, and I'll run a 1-to-3 risk reward ratio. Okay, so just to be fair. So let's put the profit target at 40 ticks. Let's put the stop at 20 ticks, 1-to-2 ratio. And then we're going to ignore special operations. We only want 1 unit. We do want to exit open positions at the exit time. So at 12:59, I'm going to exit. Okay, so that I'm out before the 1 o'clock RTH hour. Now, some brokers will charge you overnight margins if you exit, like you have to exit 15 minutes before. Some do it exactly like at 1:05. It all depends on your broker. So you have to talk to your broker as to what you would want in that scenario. Okay, guys. So let me go ahead and run it. Let me just make sure everything's correct before I do. 6:30. Yeah, we're ignoring that. 40:20. We have GC. We're still running 3 years. And I do want slippage. We have a 1-tick slippage. I'm ignoring commissions. So meaning whatever numbers you see, it's actually worse because you still have to add commissions to it. So let's see how it does if it's running just during regular trading hours. Okay. And a 1-to-2 risk reward ratio, which I think is, some people use 1.3, some people use 1.2. I've seen people use the inverse of that. So they'll have a very, very like a small price target and a very large stop. And they'll tout a high win rate, like a 95% win rate. It's really sad because the results will be very bad, very, very bad if they hit a bad day. So let's see. So it was better on obviously a lot less trades. So in 2019, you would have eked out a net profit of $24.90 at 211 trades. We multiply that, let's say, by 4. That's let's just round the numbers down to $800. Okay. And then subtract that from $2,500, $24.90. That's how much you would have made. Not that great, but can't complain. I mean, you made money. So in 2019, that would have done okay. But in 2020, you'd have lost a little over $6,000 plus another $2,000 for the commission, so $8,290. In 21, you would have lost a little bit of money plus add about $1,200 or so, or $1,600, let's say, to that $280. So less than $2,000 is what you would have lost in 2021. And in 2022, thus far, in 28 trades, you'd be up $1,480. Okay, that's a risk reward ratio of 1-to-2. So that's what it is for MACD. What do I think about this? My personal opinion, It's not good. Would I invest it? No, not at all, not one penny. I would not. This is not an investable strategy. So I would not use the MACD by itself for any trading, at least not for GC. I wouldn't do it just because I've extensively backtested every futures instrument using all sorts of indicators. MACD is no exception. It doesn't work. So let me go and do a 1, 2, 3. All right, and let's run it that way. Let's see what it's going to do, and that'll be my final test. And again, if you guys want a particular indicator that is not available, as it's not native to NinjaTrader 8, but you know about it and it's free, then let me just put the link in the comment section as to where I can go download it. I'll download it. I'll turn it into a strategy. I'll incorporate it into a strategy, and we'll run backtests on it, and I'll make a video out of it, and I'll give you credit for giving me the idea to run that indicator backtest. So using a 1 to 3 risk reward, results are worse most years, except it looks like in 2022, where it had 3 less trades and it had a better result. So out of 25 trades, it would have been, you'd be up. Now, this is what a lot of people do. I'm glad this happened, okay? Because what a lot of people do is they'll show you that only, okay? First of all, what they try to do to mess with those numbers is they don't even want to show you the stop, okay? They won't even show you that. They'll show you their profit target. They'll say, I have like an 8-tick profit target. They won't tell you they have a 200-tick stop, okay? Because they're trying to get a high win rate. So they'll get like a 95% win rate doing those kinds of ratios. But if that 200-tick stop ever gets hit, it's going to hurt, okay? You can have 5 wins in a row, and then the 6th one's a loss, and all of it is gone and then some. So they show you only like 2022. They go, look how well we've done this year. MACD is it. But if you backtest a little bit further and you get you increase the number of trades in your data set, it's really bad. This is not investable. Okay, so to close out this video, my analysis, my view on this, my personal view on this would be, I would not invest 1 penny into any strategy that is relying on an indicator or a few indicators, or in essence running only on current price action. It is not investable, in my opinion. You may get lucky, like we did here in 2022. So from January 1st until February 17th, it's had 25 trades and it's up over $2,000 already. We'll subtract the $100, 25 times 4 for commissions, so almost $2,000. All right, that's still very good, right? You would think that's good, but if you actually run an extensive backtest, you would find out that it's horrible. It is not investable. So never ever do a backtest that has 25 trades or even 100 trades in it. Okay, that's not enough. You want to have extensive amount of trades in there so that your data set is full and you can make an assumption based on a much more robust data set. That's it for this video, guys. If you have any questions, please put it in the comment section. If you want a demo of my strategy, Price Action Harvester Automated, just fill out the form on pinnaclequant.com and we'll be in touch with you, and we can arrange a time so that I can present a live Zoom demo of how my strategy works. Until next time, take care and God bless.